So then I entered, and then go on one time frame, press play. We had a great response. I've gone to the 5 minute. All right, you can see it hit the low. But then this is the importance of targets, because look what happens. Boom. Price would have taken me out if I didn't have the right target. All right. So this is the importance of targets. And the reason why I targeted this low was because, see, there's a common theme amongst aspiring traders. And that is when they jump on the charts in the morning, they struggle to find the correct market direction. They struggle to have clarity in regards to the way the market should be trading. See, so what I'm going to do in this video today, I'm going to show you exactly how I, all right, determine the way the market is trading when I jump on the charts in the morning. Hopefully by the end of this video, you'll have clarity as to how you can do the same thing as well. So what I'm going to show you is a trade that I took a couple of weeks ago, which gives you a clear example of this and how you can see which way the market is trading by trading away from what I'm about to show you. All right. Okay, so here we have a GBP USD on the 28th of March. So I've started off on the higher time frame. Okay, if I'm honest with you, in regards to this trade, the hard time frame didn't matter too much. There was one piece just here, and I'll show you. But I'll still have a look at the others. Sorry, I'll still look at the previous days to give you an overview of what was taking place. But you can see here that, so from this side, you got a massive move lower, which was an inducement of these lows. All right, and then we moved higher. And then throughout this, we have tried to build up liquidity here. Although this on the way up was induced by this low, and you had this build up, which is all taken out, right? But now we're on the way back down slightly, and what's happened here is first things first, had this build up taken out, and price kept going lower, and then price done two things. It created trendline liquidity here, and also trendline liquidity here. All right. So you got liquidity on both sides. You can see here, the trendline liquidity at the top held the multiple highs, consecutive mitigations, and then it came down and took out this these buyers down here of trendline liquidity. But not only did it do that, it also took out this structural low to the left. And then once that happened, price created that inducement and then moved away. All right, and once it moved away, there's only one place that price was heading towards. Obviously, this liquidity up here. But before it did that, if I go down to the 15 minute, you can see here, there are mini cycles that were created as price was moving higher. So it just took out a low, created structural lows, then took them out to then move higher. All right, then again here, create a structural low, took it out to then move higher, and then give us the inducement on the 1 hour of the multiple highs. All right, so that's what we had on the 1 hour time frame. And here we have here, so now we have an inducement of the multiple highs. So we're expecting some kind of reaction. Okay, so if I look at this, if I mark this out, you can see here, this is now my main inducement. So where do I think price is going to be trading to? Okay, so first things first, let's go on the 5 minute time frame. And I really marked out the fact that price created a build up of these highs, took out the structural low or lows to then go higher to give us the main inducement. All right, so this is now London session 28th of March, all right? This was a Friday, end of the week. But what am I looking at? So I'm looking at this now and I'm thinking, okay, so if I've got my main inducement up here, I want to trade away from this if I get the opportunity, all right? My target being this low. Okay, so I knew that once this low had been hit, if I'm honest, I mean, I would have to wait for more cycles, more liquidity cycles to understand where price is going to head towards, all right? But here, this was one of the easiest trades I've taken in a long time. Why? Because we had the main inducement here to the left, and then we had inducement. So we had a build up, inducement, and a build up obviously on the 1 hour of these multiple highs, okay? But then on the intraday perspective, we had all of this as well, all right? I'm sure you can hear the ice cream van in the background. If you can't, then sorry about that. Summer's coming in England. We can't wait. So we had this build up here, okay? So all of this channel type liquidity. And then during Frankfurt session, Frankfurt gave us a nice inducement to the high side, but not only did it just aggressively take out this channel, it took out also, this structural point here as well. Okay? This happened at 7:30 a.m. So this is Frankfurt session. The grey box is London. All right? So I have my main inducement which I want to trade away from. If you've not worked out already in regards to how to work out price direction, you want to be trading away from the relevant inducement. All right? Until the opposing liquidity target has been met. In my sense, and in my view, in regards to this main inducement, the opposing liquidity target was at least this low here. All right. So I was just trying to find a way to get in now safely with a high enough risk to reward to then take out this low. For me, I don't take trades that are less than 5R. I like 5R plus trades personally, just because it means that my win rate doesn't have to be sensational for me to make great profit. Doesn't mean that my win rate isn't good, but it just means that even if I don't perform well, I'm still know that my system can, give me a great edge in that sense. All right. So if you look at this now, so we had our build up. This is on the intraday time frame. We had our build up, had our main inducement of the day. All right. Remember, this is the previous day. The main inducement of the day, which is an intraday time frame. All right. Intraday inducement. This is when I wanted to trade away from. All right. So what else did we have to go on the 1 minute time frame? So before that happened, we also had several lows created, creating a nice build up for us to target as well. But even here at this point, this build up down here still wasn't even taken yet, making my trade or making my target even more highly probable. All right. Because if price was to come down and take out these lows, then, I might think, price might come, take these lows out and then come higher to then either come into here or even maybe take out this high. All right. But in this case, the build up high wasn't even taken out yet. So now we get into the nitty gritty of the 1 minute time frame. All right. This is how I take my entries, the 1 minute time frame, typically. So we had nice here, small, but I class that as a nice build up. Again, small, but just the characteristics of the price action, which is a nice build up into the inducement, then trade away aggressively with plenty of displacement or imbalance, whatever you want to call it. As that happens, price is going to give you some kind of pullback, right? You can see here, price, and created a nice channel build up, a bearish channel induced to the low side. And then what it done is traded back higher to take out the channel, okay, but into the balanced price range or the displacement or fair value gap, whatever you want to call it. Then give us a nice relevant breaker structure with a nice mitigation of the high to then trade away from. This wasn't my trade. I had missed this trade, all right? So I'm looking at this, I'm like, okay, cool. Well, at least this target here still hadn't been hit. So we may get another opportunity. What was I seeing? I was seeing this. Another set of equal lows created here. Liquidity to target. Another set of equal highs here. And then we even had these highs like this, all right? Liquidity to take. So a liquidity to take into the entry or into, this zone as a whole, and liquidity to take or target if price was to come up before going down. If price just came lower, took out all of this stuff, then means going higher, I have to look for a bit more confirmations to take the trade. However, with all of this liquidity here to target, and then I had this liquidity here to take into a potential entry, it made it a high probability trade, as well as the fact that we were in London session. All right, cool. So what did I see? So then price started moving aggressively. Look at the characteristics. The vector candles. Price moved aggressively towards this zone. All right. So the question now is price going to take this out and come into here, or is it going to respect this zone? I saw this as a protected area, so I didn't believe this was going to be taken. I believed that price would come up, and I actually had this marked out here, this final imbalance, the final candle, to see what would happen before price moved away. See, if I was really confident, I could have potentially taken the entry like this to at least target the low. If not, then target my main target for 17/18R. However, I wasn't that confident, all right, in regards to this particular entry. So I wanted more to confirm. So what happened? The price went higher, mitigated, and gave us a nice rejection. Let's go on to the 30 seconds. I want to show you something. Let's go on to even the 15 seconds, all right? So even in this here, I saw this as, this is what I see when I'm trading. I even saw this as build up. And again, nice structural point here, created to then create another high, take that out, and then I saw this taken out. Back to the 30 seconds. All right, so was I confident to take the trade already? Not really. All right, so I'm gonna show you what I did do though. The price came back up, gone to the 15 seconds. I did see this, balanced price range. All right. So this aggressive reaction on the 15-second time frame, I did see that and think, okay, there's a good chance then that we might not take out this high. This is the inducement high, so we may just respect this. All right. We've also created equal highs on that time frame. All right. So then price goes higher. Again, characteristics. Vector candle into the inducement high, and price traded away. Right, so where did I enter? I entered just as, I believe it was around here when price broke. I'll fix it if it's wrong, guys. I know it was about, yeah. I targeted here. It wasn't that good of a trade. My entry wasn't that good. So yeah, it's probably more like that. To be honest with you guys, it wasn't a sensational entry, but it was okay. So yeah, so once price, I saw that this was the inducement high on the one. This is the M1 now, the 1 minute time frame. This was the inducement high. We respected the mitigation or the order flow. This was the inducement high. We had the 15-second, build up inducement, etc. here. Vector candle into the inducement high, respected it, and as price came lower and kept rejecting, and then it took out this low. This was it. All right, but then it went higher, but then came back down again. So it took out this low and then went higher to take out another structural point here. Came high, lower, and then once I saw this rejection, I was like, okay, I can't not take this trade now. Although this is not the cleanest on the M1 at all, it made sense on the 15-second time frame, 30-second time frame. So I was like, okay, the whole overall picture makes sense. I've got my main inducement of the day, got another inducement here, and then I've got another inducement here, right? I'm just trading inducement after inducement. So then I entered, and then on the one time frame, I press play. With a great response, I've gone to the 5 minute. All right, you can see it hit the low. But then this is the importance of targets, because look what happens. Boom. Price would have taken me out if I didn't have the right target. All right. So this is the importance of targets. And the reason why I targeted this low was because it was the low that made the high of the inducement, the main inducement I was targeting. All right. So I was playing this leg basically of the day. All right. So how do you work out which way the market's going to be trading that day or for that session? Look at the build-ups, look at the inducements, and you trade away from the inducements. Simple as that.